So I want to talk about Acorns. Acorns is the micro investing site that allows you to basically get yourself invested in a well diversified portfolio of stocks, real estate, and bonds. And it does so by providing you the ability to invest in ETFs and invest very little at a time. $5 is the minimum. So you could invest $5 a month even if you want, or invest just $5 at one time, set it and forget it. There's a lot of benefits to using a service like Acorns. Number one is that Acorns allows you to invest incrementally at your own pace. So if you want to make an investment, especially if you're just starting out to invest, Acorn provides you a very well diversified portfolio. It can really teach you the right way to approach the market and how you want to get invested in the market before you go out and start buying stocks or things like that on your own. Because Acorns provides you balance, it provides you diversity in your holdings. What Acorns does is give you six different ETFs based on how risky or how conservative you want the investment to be. Will determine the how much of your investment is going into stocks versus things like bonds. If you're more conservative, you're going to be purchasing more bonds, corporate and government bonds, as opposed to um, if you want to be more aggressive, which gives you more opportunity to make returns, but also provides more risk, you'd have more money in the market. The market is a lot more volatile than things like bonds. So there's a whole range of options you could pick. I think there's five or six different ones, but they're all invested in the same six ETFs. The VOO, which is the S&P 500 index. So it tracks the S&P 500. That particular ETF will perform on par with how the S&P 500 index is performing. There's also VB, which is small cap stocks. If you're more aggressive and you choose the more aggressive portfolio, they'll put a higher percentage in VB, which is the small cap stocks, than they'll put in bonds. On top of that, there's the emerging market, which is VWO. It invests in China and high growth uh, stock markets across the world, and that provides you the opportunity to capitalize on growth in places like Brazil and China and South Korea. And actually, I don't think that VWO holds any holdings in South Korea. I may be wrong, but in other markets around the world, it will allow you to do that. There's the real estate, which is an ETF of REITs, real estate investment trusts, and that's just basically an ETF that is investing on behalf of you into all different real estate holdings, with places like casinos and hotels and residential development companies, commercial development companies. Um, that's how you get involved. You diversify further. If real estate jumps through the roof, it's still a part of your portfolio. There's also corporate bonds and government bonds. Corporate bonds give you basically a better yield, but there's a little bit more risk. Municipal bonds are more guaranteed, but the likeliness of either, of you losing money in either is very, very slim. And you can have anywhere from 30 to 60% of your portfolio invested in bonds, depending on, which type of risk which type of risk strategy you choose, a more aggressive one or a more conservative one. Um, so Acorns gives you the ability to invest. You could start $5 at a time, and you get, a very good way to invest incrementally, especially if you're just starting out and don't have the money to open a real brokerage account, or you're just starting to learn and you want to learn how to manage a diversified portfolio without risking money in the market. What you can do is, I have a link below this video where you can sign up and get $5 for free. So you just sign up, you get $5 in your account. Acorns charges a $1 a month fee for their service. However, if you use a .edu email address to sign up, you pay zero. So they give you $5, and then for 4 years from the date you sign up, I believe, as long as you sign up with that email address, you will not be charged any fee on your account, which is great because you're really just getting $5 for free, and you're investing in the market and you're seeing how the returns work. You could correlate it with the indexes. It's a great way to learn about portfolio investing because you're actually invested in the market. You're not just watching from a distance, and you're seeing, the components of a portfolio and how to minimize risk in a portfolio, how to maximize your returns in a portfolio. You're getting all of that for free. So it's one of the best. It's probably the best micro investing platform out there, just because the fees are so low. Um, I signed up with my old .edu email address, and I received, $0 in fees. It's great, and it's $5. When you refer a friend, you'd also get $5. But just for signing up, you get $5 if you use the link that I put down below. If you just go to their website and sign up, they won't give you the $5 for free. But if you click the link that I have in the description of the video, you'll see that they say they'll give you $5 into your account as soon as it's approved. So you get invested in the market without investing a cent. And that $5 can grow over 4 years. It may double or triple. And if you added in addition to that, it could grow even more. You never know what's going to happen in the future. But for you to get invested in a way where you're actively learning, you have a well diversified portfolio, you have options, you see how really to increase your risk and decrease it if you want at the same time, while still having that diversity in there to minimize your risk on the downside. If you just go in and play stocks in the market picking winners and losers, you're bound to lose. Picking in winners and losers doesn't work unless you do a lot of research into the company. You need to understand fundamentals about the company, how the company is performing, what their growth prospects are, and you need to understand a lot of things about their cash flow, their dividends, all different kind of things. So just buying stocks in the stock market is a losing bet. If you want steady, secure growth, and you want growth along with, with the markets as a whole, then you need a diversified portfolio. And the best way to get that on the cheap is Acorns. If you're a student, I highly, highly suggest this, especially if you're some type of business or finance student. Learning about ETFs and what the benefits of ETFs are is something that everyone should know before investing a cent in the stock market. A lot of people just start buying stocks without knowing how to truly build a diverse portfolio, how to minimize your risk, and then they just go bust and they lose all their money because sometimes they're opening margin accounts. And margin accounts are bad because if you have a 25% margin and you lose 25% of what you buy in the market, there goes your whole investment. It's gone. You're down to zero. So margin can provide you bigger returns, but can also hurt you just as bad. So you need something like Acorns to start investing the right way, to start investing, with minimal risk, with minimal fees associated. To buy a stock costs $8-9. If you go into your standard brokerage and you want to make the trade, if your standard online brokerage. $9 is a crazy amount to buy stocks if you're investing a few $100 or even less. What if you only have $50, but you still want to gain the benefit from that $50 that you see the people in the market getting when their money is growing at those rates? There's no fees with Acorns to withdraw money, to add money. They can link to your card and keep the change from your purchases. So if you purchase something for $1.70, it will put 30 cents into your Acorns account and make that into a $2 charge. But you don't have to do that. That's just an option. You can just invest as much as you want or as little as you want at a time. The minimum being $5, obviously, because there are fees associated with doing bank transfers. So you can't invest 50 cents or anything like that. But you get the first $5 free. So you could sign up for it. Not you learn from it, and at the end of the day it doesn't actually cost you anything. You actually make money from it. So they're giving a great deal, and you should sign up for Acorns. The ETFs they offer are great. The Vanguard ETFs, especially VOO, it's doing very well. The market right now after the Trump victory is at record highs. It'll probably spike up. There's increased interest in business activity now because of proposed tax cuts and regulatory cuts and things like that are really going to help investors. It's going to help them when companies get big tax cuts, the money goes straight onto their balance sheet. A 15% reduction in tax cuts is right away a 15% extra profit the company earns. And that's every company in America. A lot of these companies will turn around and put that money, or at least part of it, back into dividends, which are going to go back into your account and make your account grow faster. So if you're saving in like a traditional, 401k or something like that, your fees could be 1.5% a year, or which is crazy, especially if you experience a low growth year where you're only getting 3-4% on your money. um, you would be paying a crazy amount in fees. And if you have a losing year on top of that, you're paying fees. With Acorns, you don't have any of that because you signed up with your EDU email address. Your fees are, limited. Also, your fees are capped at $1 a month as long as you have less than $5,000 in that account. So if you want to use it as a way to hedge against your stock bets, you could do that as well. There's a lot of options with it. You need to sign up and see what it can do for you, because signing up for it is free and you're not paying anything. It's costing you nothing out of pocket, and you're getting a free investment into the stock market, which could grow exponentially in the future. You're also being invested in real estate. You're being invested in bonds. You're being invested in emerging markets. You're taking advantage of so much opportunity, and because you're buying them through these ETFs, you're taking the research out of it. You're taking the guesswork out of it. You're following indexes. You're following, a whole group of stocks. A VOO has tons of stocks weighted in their portfolio. It's so well balanced that if the market goes up, it will go up at the same rate that the market goes up. You're not actually having to worry about whether your stock is going to perform well relative to the market or not. So you lose nothing, and I would really recommend it, especially for students, because students get it for free with no fees. If you have more than $5,000 in it, which I know some people that do, you will pay a quarter of 1%. So it's 0.25%, not 25%, 0.25. That's one quarter of 1% a year. That's a lot cheaper than any 401k or other type of investment account that you're going to have. Of course, there's tax benefits and things like that to 401ks, but with the 401k, you pay the taxes when you take the money out. So you're still going to be paying those taxes one way or another. With Acorns, you hold for more than a year in these investments, and you pay, long-term capital gains tax, which are very low, 15%. So there's a lot of benefit. There's really a lot of benefit, and you should consider that, to let your money grow in the future, or to just start learning how to invest in the market, but to do it the right way. A lot of people get invested the wrong way and lose their shirt. And you don't have to. You can learn how a portfolio is built, what the portfolio is composed of. So I'm just going to give you an example of the large of the what the holdings are. So when we look at this large cap, the VOO, it has investments in companies like Apple, in companies like Google, ExxonMobil, Microsoft, General Electric, Johnson and Johnson. Those are the six biggest holdings that it has. So you're investing in America's biggest companies this way, and you also could get into the VB, which gives you, you know, smaller companies like Tower Watson, companies like Fortune Brands and Genworth, Jarden, Cooper. There's just so many different stocks that these things are invested in. What you're doing with it is getting hundreds of stocks when you buy into a Acorns portfolio. You're getting a little bit of each one of those stocks. So you're invested just like your 401k would be invested in the market. So there's minimal risk, just like you have with your regular, retirement savings account. It's not as risky as putting your money in the market. So that's something you want to do. So please sign up on the bottom. You help yourself out. You help me out. We both get $5, and you sign up for Acorns for free, and you get to start being a part of the market. And every day you can go in and you could check how your investments are doing, and you could check the market, and you can really learn the right way to invest for your future, rather than making the mistakes that other people have made and lost a lot of money when they're just buying stocks based on picking winners and losers.